Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. An expert warns the Philippines may fall short of its 6.5% growth target this year. DBS Bank cuts its 2025 inflation forecast for the Philippines from 2.6% to just 1.7%. President Bongbong Marcos flags questionable flood control projects, many with identical price tags. Let's check on how markets did overseas. Now, U.S. stocks closed higher Friday on rate cut optimism and tech gains that pushed the Nasdaq closer to record territory. Analysts say strong earnings, hopes for lower rates, and signs of easing geopolitical tensions are driving the markets.
Stocks are up and are going to close the week near their high, with new all-time highs likely for the S&P and definitely for the Nasdaq. It's a combination of some geopolitical hopes. The fact that the president is going to meet with Putin very near term is giving some hope of relaxation of geopolitical tensions. Earnings continue to be strong, and the hope for lower interest rates.
The Dow Jones Industrial Average rose 0.5%. The S&P 500 gained 0.8%. The Nasdaq added about 1%. Over in Europe, markets ended mixed. London's FTSE fell, down by just 0.1%. Germany's DAX lower by 0.1% as well, and France's CAC 40 higher by 0.4%. Here at home, the Philippine economy is losing momentum, with global and domestic headwinds making the government's top growth target hard to reach. Higher U.S. tariffs on key exports and slower remittances are weighing on demand, adding to post-election uncertainty here at home. Calixto Chiquiamco, president of the Foundation for Economic Freedom, says hitting 6.5% is possible, but unlikely. He cites Trump's tariffs and the global slowdown as major risks and warns the country must strengthen manufacturing and investment to regain speed. The Development Bank of Singapore, or DBS, cuts its 2025 inflation forecast for the Philippines to just 1.7% from 2.6%, citing cooler food prices and a broad slowdown across the economy. The Singapore-based bank now expects the Bangko Sentral ng Pilipinas to deliver another 50 basis point rate cut this year, a move that could lower borrowing costs for businesses and consumers. DBS also trimmed its 2025 growth outlook from 5.8% to 5.6%, warning of a post-election slowdown and uncertainty in global trade. The bank says that the Philippines needs to jumpstart manufacturing and attract more foreign investments to get back on a stronger growth trajectory. The government released 52.5 billion pesos in subsidies to state-owned corporations in the first half of the year, a sharp drop from last year. The Bureau of Treasury's data shows that's nearly 22% lower than the 67.2 billion pesos in the same period of 2024. The bulk went to major non-financial government corporations, totaling 29.7 billion pesos. For businesses, fewer subsidies mean state firms may scale back projects, delay partnerships, and cut spending that feeds into private contracts, a direct hit to suppliers, service providers, and jobs in government-led sectors. Now, a record 1 trillion peso profit and questions over how it was made is putting property developer Villar Land Holdings under regulatory scrutiny, with investor confidence and sector transparency on the line. The company, part of the Villar family's business empire, led by former Senate President Manny Villar, one of the richest people in the Philippines, is best known for large-scale real estate developments nationwide. The Securities and Exchange Commission is reviewing the figure, mostly from property valuation gains, to check for any irregularities. The property developer, formerly Golden MD Holdings, reported net income surging from 1.46 billion pesos to nearly 1 trillion. Driven by reappraisals of prime land in its 3,500 hectare Villar City project. Trading of its shares has been suspended since May for failure to file its 2024 annual report. The SEC says it is still in the fact-finding stage, looking into possible insider trading or market manipulation. Bilyonaryo says its books are undergoing a rigorous external audit and vows full cooperation with regulators. The Philippines came out with the smallest win in ASEAN from the tariff talks with the United States. The IDS Emeritus Research Fellow Joseph Yap says our effective tariff improved by just 0.3 percentage point compared to Indonesia's 8.47 and Vietnam's 12.15. Indonesia and Vietnam walked away with lower final rates of 19 and 20% respectively. The Philippines still at 19%, even after starting from 17. That leaves local exporters at a price disadvantage and gives regional rivals more room to capture U.S. orders. On another front, Senator Panfilo Lacson warns that as much as 60% of funding for some flood control projects is lost to corruption before any construction even starts. He claims contractors are forced to pay a passing-through fee of 5 to 6% when operating in districts where lawmakers or their relatives have construction interests. Once taxes and commissions are deducted, Lacson says less than 40% is left for actual work, resulting in shortcuts, substandard materials, and structures that fail under cyclones. He warns that this isn't just a waste of billions in public funds. It puts communities and businesses in danger when flood hits. Lacson wants the DPWH's list of flood control projects sent to the palace and says officials responsible should face charges. When flood control projects fail, it's not just homes that suffer. Businesses lose inventory, operations halt, and insurance costs spike. Metro Manila's chronic flooding is more than an inconvenience. It's an economic liability, costing billions. Senator Panfilo Lacson wants budget cuts in flood management programs targeting the Public Works and Highways Department and the MMDA. This, if Bilyonaryo and San Miguel Corporation Chief Ramon Ang pushes through with his offer to take over Metro Manila's flood control program. Ang says he can solve the NCR's flooding without using government funds, but he needs an official go signal. If that happens, Lacson says the government could save billions, freeing up funds for other priorities, but it also raises questions on accountability, transparency, and long-term maintenance. Now, in a news briefing this morning, President Marcos said that he will look into RSA's proposal. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most, your bottom line. Welcome back. Let's check on how Asian markets are doing this Monday morning. Right now, I'm seeing a lot of green. The Nikkei 225 is higher by almost 2%. Hong Kong's Hang Seng Index flat with a slight upward bias. Shanghai's Composite up by 0.1%, and Singapore's Straits Times Index higher by 0.1%. Here at home, the PSE Index closed lower Friday, extending losses as U.S. tariff worries and weak data kept investors on edge. The index slipped 0.4% to 63.39. Banks led the declines while property and mining helped limit the drop. Turnover reached 7.25 billion pesos on 1.42 billion shares traded. Analysts cite pressure from softer GDP figures. The August 18 PSCI rebalancing when DigiPlus Interactive replaces Bloomberry, and renewed concerns over tariffs on chips and semiconductors. The Philippines' top U.S. export, the debt to GDP ratio hitting a year high of 63.1%, also weighed on investor sentiment. This week, traders are watching inflation data from the United States and China, more local earnings, and any signals of central bank rate cuts. Support is seen at 6,300, then 6,250, with resistance at around 6,400. Let's take a look at the PSE index today. As of 10:15, the market is in the red, lower by 0.2% to 63.26. The broader all shares index down, slight downward bias as well, down by 0.1% to 37.65. Taking a look at the sub-indices, we're looking at a mixed picture. The financials and the services counters are helping to limit the market's decline. Total volume traded is at 139 million shares. Value is at a little over $1 billion pesos. Now, advancers, we've got 53 advancers, 74 decliners, and 49 stocks on change for bearish. Contractors and no specific details. These projects are mostly in Metro Manila, Central Luzon, and the Bicol region. The president made the revelation while launching a website that lets the public track flood control projects in their areas. He says that the interactive site promotes transparency and public participation, making it easier to find and verify project information. Citizens can now view the cost, contractor, and other details. Nearly 10,000 DPWH flood control projects from July 2022 to present via the sumbongsapangulo.ph website. The total cost, 545 billion pesos.
We have received the list from DPWH. We, I think, have put it into a form that is accessible to the public. And most importantly, it is in a form that the public can use so that they can first identify the projects, the flood control projects that are within their area, within their barangay, so that they can actually go and look at it. Or if they already have information, they can tell us about it. Kung maganda yung naging project, kung hindi maganda yung naging project, bakit hindi maganda yung naging project, ano naging problema.
From garments to electronics, Philippine exporters are facing tougher competition, with a 19% U.S. tariff in place and some ASEAN rivals enjoying better trade deals. This matters because exports support millions of jobs and are a crucial source of dollar earnings for the country. Robert Young, the president of the Foreign Buyers Association of the Philippines, represents international buying offices that source from Philippine manufacturers, connecting foreign buyers with local producers and advocating policies to keep our exporters competitive. Today, we ask him how buyers are reacting, which sectors are most at risk, and where the next opportunities may be. Hi, Mr. Young. Thank you for being here with us.
Thank you for inviting me, Ms. Maiki.
Yeah, interesting topic on Philippine exports. Let's start with the current trade climate. And to assess this, sometimes we need to look back in order to understand where we are now. That said, sir, when you take a look at the first half of the year, how was our national competitive standing then?
It's quite remarkable. The Philippine export showing rose to about 26%. This is as per the DTI figures that we just gathered a few days ago. And so this is a very good signal for the international market. The international buyer will have some confidence in this kind of figures that we have just released. However, realistically, we cannot use this as a gauge as a continuing trend. The reason behind this is, the world got rattled when this Trump tariff came out of the picture, and so everybody was rushing. They had these push outs, we call it, or the accelerated deliveries. So that increased the figures. So this is not actually realistic figures.
So the buying programs are a year out. They start a year out.
That's right.
Seasons in advance, especially
That's
for
right.
garments. That said, you mentioned that the DTI just released figures that total exports in the first half are up 26%. So you sense that these figures are a little bit artificial as companies try to take advantage of that time before the tariffs took effect. What would you say about this 26% jump in the first half, sir?
Yes, that's the reason why we have this kind of increase. All the suppliers, really rushed to beat the deadline, the tariff deadline.
They scrambled with higher volumes.
With higher volumes, yes. They accelerated their shipments, and that increased the figures of the export performance of the Philippines. So,
yeah, looking at the second half of the year, so many more hurdles to jump. We just received word that the semiconductors are top export to the U.S. President Trump is now threatening a 100% tariff on semiconductor imports. That's how do you assess that? What's your reaction to this, sir?
our reaction is really like this will be a hard climb for the semiconductor sector, and really we will not be any more competitive, I think, in the world market in case this will be done on this 100% increase. So the government somehow should really act swiftly. The high degree of urgency is there already.
So from a 26% growth in the first half of 2025, sir, as the cards are being laid out, are you looking at a contraction in the second half?
This will all depend actually on the reaction of the U.S. consumers. You see, the judgment will be if the U.S. consumers will still pick up the Philippine products from the shelves. Meaning, if we are the highest priced among all these countries, the ASEAN countries that also shipping to America, of course, this will be a bad signal to the American buyers. We might just be erased from their buying program. So in the 3 months' time, we should really sharpen our pencils to make sure that our prices are still the minimum that we can
Yeah,
can,
it's all
give,
about
yes.
really all about pricing.
all about pricing.
Sir, with the 19% U.S. tariff now in effect, how are American buyers responding? Are they canceling orders? Or are they renegotiating? I mean, these are relationships that have spanned years. What are they doing now? Are they tweaking any of their orders, the volumes? And are foreign buyers willing to absorb part of the increasing costs due to the tariffs?
Yes, we are very lucky that our buyers, our U.S. principals, are very cooperative in the sense that they are ready to have this kind of sharing scheme on the tariff. Some even offered for like a 50-50 sharing, 50% on them and 50% on the Philippine side. Some are like 75-25, depends. It's case-to-case basis. But this is, of course, a welcome
Yeah, they're helping and they're
news.
cooperative
Of course,
in absorbing
yes.
that cost.
Plus the fact that we have dealt with them for the past many, many years, and so perhaps they took into consideration the relationship also as well.
Yeah.
So we're happy that we can somehow at least survive this. But this is in the meantime. We don't know how long this arrangement will hold.
Yeah.
Just so we can finish the contract, because as I mentioned a while ago, the contract is like for 1 year, and so we just have
It's
to
anyone's
finish all
guess
this.
to see how buyers' preferences will
Exactly.
change after that time period. Something worth mentioning, sir, even before this tariff, our prices were about 15% higher than Vietnam and Bangladesh. With this new rate in place, where does the Philippines stand now in terms of our national competitiveness in exports?
This will be really a hard hurdle for us. We should do double, if not triple effort. But we are doing and finding ways and means. Like for instance, in the textile division, we try to scout for the cheapest source of fabric around the globe. Like, we went as far as like Turkey, Pakistan, India to look for the cheaper fabric, textile to be used for the production. Then again, of course, this when you imputed this in the FOB free on board pricing, somehow it can ease up, the costing. It will not be as high as you mentioned that we are 15% higher already originally, the pre-Trump tariff, and then again this 19%. You can imagine already how much we will end up, So with this remedials that we are doing, somehow it can ease up the business. Somehow.
What are the buyers' top complaints? Is it really just pricing, sir?
All over the world, this is really their motto now. It's the best price for the best quality. So it is not new to us. So we are not resting. We really sharpen our pencils and really try to lower down our cost and be in the competition still.
Going back to the tariffs on semiconductors, our top export, DepDev Secretary Arsenio Balisacan says this will have a minimal impact. What are your thoughts on this? How big or how little of an impact will it have on us?
An increase is always be an increase. You see, what the problem here now is if this the buyers, the U.S. buyers and the local suppliers will somehow make an arrangement or somewhere that they can meet halfway to ease up this tariff shift. So I guess we can survive until the end of the year, but the 2026 will be very, very crucial.
There's that tariff shift, that 19% tariff shift, but then there's also the threat of a 100% tariff on
That's
U.S. On semiconductor imports to the U.S.
That's right.
How do you think that's going to hit us, sir?
It will be very, very tragic for sure, because we might be losing the business already if that will be the case. It's not like I said, increase will be always an increase. So I don't know how they can manage to somehow remedy this.
Yeah, when we look at concrete steps to remedy this over the short term and over the long term, sir, what do our exporters need to do differently in the second half in order to maintain that competitive advantage and to maintain their market share?
Like I mentioned a while ago, just keep on looking for means to cut cost. On the supply side, we are an importing country, so we don't have raw materials in the Philippines. Getting a cheaper materials for production will somehow lower down the free onboard pricing, and so we can still be in the competition, I think.
In order to compete, we also need to produce things that can only be found in the Philippines. Is there an area where the Philippines has a niche or has a niche we can own, something no one else we can produce? Maybe in tropical fiber or in other indigenous material, something that dito lang sa Pilipinas makukuha, sir.
You are right. Tama ka dyan, Maiki. You mentioned the tropical and the indigenous fiber. Yes, we are very much into that now. The government is in full support. However, it did not yet click in the international market. But this we can call our own. About the salability, we don't know yet the commercial value of that. But somehow I think we have to refocus on the more viable items, just like the textile, which is for everyday wear, as they call it. This can somehow also help if we can revive the textile industry of the Philippines on that sector, on the everyday wear textile.
We can
and
compete
not the
on
specialized
craftsmanship, materials, and
Correct.
flexibility. Sir, in terms of new markets and diversification, beyond the United States, what are the near-term growth opportunities here? I mean, there's so many other big markets. There's Russia, there's Canada.
Correct. We have plans now for Russia. We are exploring Russia right now, in fact, with DTI. And we have been shipping to Canada, actually, for the many years in winter clothes until we lost it to Bangladesh and Vietnam. So now we're trying to revive the relationship and focus somehow on these guys, Canada, Australia, EU. I think it was our
It'd
mistake
be
also.
interesting if we could talk specifics like the brands and the actual products, but you have confidentiality clauses, so we
That's
won't
right.
go there. We have to speak in broader strokes. When we talk about remedial measures from the government, sir, what can the government do at the onset and long term to soften this blow?
There are many ways, but the impact should be felt immediately, such as the port fees. They can somehow perhaps suspend or reduce or subsidize. There will be some also tax holidays that can offer. So the exporters will be somehow not burdened with all these
Alleviate some
costs.
of that
It can be
burden.
alleviated.
So when
the
you
cost
say, of course, you want no port fees, as some countries have scrapped that, if it would be a reduction, what would be a good number?
It will
for a
be
reduction in
minimal.
port
It
fees?
will be minimal, but at least it will help. Like I said, from the textile pricing and all these raw materials and the suppliers, the supplies, and with all this help, tax holidays and the port fees, this will at the end of the computation, you can see that the FOB cost will lower
Yes,
down.
and then
we
it's
can
really all
still
about
be
price.
correct,
Compete based on
correct,
price.
so that we can
Sir,
be
of course, better kung walang port fees. Pero what's a number that you can work with in terms of lower port fees? What would you like from the government?
at least subsidize half of it, at least, you see, in the beginning, because we know that they need this also for the government revenue. But somehow it will also give the right signal to the exporters to go on. We are here to help you, and we are not abandoning you. This is a very important thing. Motherhood statements on this kind of it should not be anymore included in the agenda. I think.
We need actionable information. Actionable information.
That's
and just strong moves.
That's right.
Speaking of strong moves, what do you think of the DTI's export promotion budget, and how does it compare with our neighbors like Thailand and Vietnam?
The several groups are complaining. To be frank about it, it's pathetic, the budget for this promotional thing. And compared to the other ASEAN neighbors, perhaps we are the last in this kind of budget. I don't have the figure also now. Just to cite to you, Malaysia, Indonesia, Thailand, they have major trade fairs every month. They invite us
And with incentives, free tickets, free hotels for people to come. But maybe in our case, it's seen as an expense and not as an investment.
Correct.
How can we persuade the DTI, the government, to invest?
We just have to prove to them that it's really important, especially at this time of this kind of crisis. We have to have that. They always say, nobody will be there. Nobody will go to our booth. They have to understand that the industry presence is important. You just have to be there. Just like what the other countries that I mentioned. They don't care whether you come and check their prices to here and there, but they are there. Malaysia included, Vietnam is there. Where you look for Philippines, where are they?
Sir, if nothing changes within the next 6 to 12 months, what would be the likely impact on export volumes and on jobs?
The jobs will definitely be affected if there will be closures or somehow downsizing. I hope not. I hope it will not happen. But we are trying. We are not waving the white flag.
Yeah.
So we, in our own capacity, we are exerting all efforts to stand on our own feet, with or without the government subsidy, and just we keep on moving forward.
What's the silver lining here, sir? Do you see any silver lining?
Silver lining is like this tariff can be just one of the passing scenes.
Just
in
a
3
passing
years' time
storm.
or 4 years' time will be another story. And who knows? A lot of cases are now a lot of opposition being thrown at this tariff thing. So we don't know what will happen. This is to us a geopolitical topic. So we just hope for the better.
Yeah, hoping for
and
the best.
for the country.
Yeah. Thank
for
you
our
so
country.
much for sharing your thoughts with us.
Thank
Mr.
you for
Young.
inviting me, Ms. Maiki Oreta.
All right. We're going to be taking a short break. Business 360 will be right back. Welcome back. Ayala Land is tapping the markets for 50 billion pesos in the second half to fuel its next growth push. The fundraising starts this month with 60% in a sustainability-linked financing format, signaling strong demand for ESG-compliant projects. CFO Augusto Bengzon says 40% will come from the debt capital markets, another 40% from bilateral bank loans, and the remaining 20% from a multilateral agency. This is one of the biggest fundraising moves by a local developer this year, coming at a time when capital markets are picky, funding costs are high, and demand for sustainable projects is growing. Ayala Land's push shows that the country's largest property players are still betting big, even with softer economic growth and higher global competition for investor capital. Now, the shares of International Container Terminal Services, or ICTSI, surged last week, lifted by strong earnings and new growth signals. Data from the Philippine Stock Exchange shows ICTSI closed Friday at 488 pesos, up 7.3% from 455 pesos on August 1st. Investors welcomed robust profits and updates on its Luzon terminal project, which is expected to boost capacity when it opens in 2028. For the logistics sector, that means more trade flow and potentially stronger revenues in the years ahead. The government will begin selling rice at 20 pesos per kilo to millions of farmers and farm workers starting August 13th, a move meant to ease living costs but criticized as a short-term fix. Agriculture Secretary Francisco Tu Laurel Jr. says it's a form of relief for those who feed the nation, even as longer-term solutions like higher tariffs on imports and a halt to rice imports remain stalled by weak data systems. The president has already ordered a 60-day import suspension starting September 1st, a policy that could lift local prices if not paired with productivity boosts. Until now, the 20 peso program was limited to marginalized households. Expanding it raises questions on supply, cost to the government, and whether it can be sustained without hurting farm gate prices or the national budget. Now, gasoline and diesel prices are heading lower this week, a price cut that's good news for pretty much everyone, from daily commuters to big businesses moving goods. Gasoline could drop by 40 centavos a liter, diesel by 1 peso and 30, as the Organization of the Petroleum Exporting Countries, or OPEC, pumps more oil and hopes rise for a diplomatic end to the war in Ukraine. Experts from the Department of Health say the rise in leptospirosis cases is unlikely to escalate into a health emergency, easing concerns over workforce disruptions and productivity losses that can hit companies during outbreaks. In an interview on BNC's Agenda Weekend, Health Assistant Secretary Albert Domingo backed the assessment of Dr. Ron Jean Solante, saying infections have already spiked.
Nagbibilang tayo starting June 8 hanggang August 7. Bakit June 8? Dahil June 7 nag-declare ng rainy season ng ating pag-asa. So we already have 2,396 cases of leptospirosis recorded from June 8 to August 7, 2025 nationwide. The incubation period of leptospirosis ranges from 2 days up to 30 days, average of 2 weeks. So tulad nga na sinabi ni Dr. Ron Jean Solante, which is who is one of our infectious disease experts sa DOH San Lazaro Hospital, I second what he said. It is possible na nadaanan na natin yung peak because we have already gone through the 1 to 2 week mark. Pero we expect na meron pang mga habol in the next few days because yung range nga ng incubation is from 2 days all the way up to 30.
We're taking a short break. Business 360 will be right back. Welcome back. Israeli and Palestinian ambassadors offer sharply contrasting narratives and different solutions to end the conflict in Gaza during an emergency session of the UN Security Council. Palestinian UN Ambassador Riyad Mansour thanked countries for recognizing the crisis in Gaza, but said words alone will not stop the suffering of Palestinians.
People, children killed, maimed, displaced, starved, humiliated, mutilated, buried alive, burnt alive, abducted, tortured, orphaned, perverted, shattered, torn apart. The measures taken do not match the level of the crimes committed so as to truly deter them.
Israeli Ambassador Jonathan Miller insists that Israel is not the aggressor, saying its objective is to liberate Gaza from what he calls a brutal terror regime.
These facts have led many to rightly wonder, how on earth is Israel still allowed to sit around this table and in these United Nations? If it was another country, you would have been imposing sanctions a long time ago.
Israel's military says it has killed Al Jazeera journalist Anas al-Sharif, claiming he was a leader of a Hamas cell. Al Jazeera reports 3 are condemning the killings. China is reportedly urging the United States to lift export controls on chips critical for artificial intelligence, a move that would likely apply only to China but could still ripple through global tech supply chains, including the Philippines' electronics exports. The Financial Times reports Beijing wants this included in a trade deal before a possible meeting between President Donald Trump and Xi Jinping. China is concerned that America's restrictions on high-bandwidth memory chips could slow companies like Huawei from developing their own AI processors. Even if the United States makes this concession for China alone, it could shift chip pricing and supply globally, affecting competition and demand for Philippine-made components. The White House and China's foreign ministry have yet to comment on the report. On another front, the Mexican government is stepping in to mediate a dispute between indigenous artisans from Oaxaca and Adidas in a case that could reshape how global brands use traditional designs. The controversy centers on the Oaxaca slip-on, shoe inspired by traditional Zapotec Huaranche sandals. Artisans say Adidas used the design without permission, undermining both their cultural heritage and economic livelihood. Mexican President Claudia Sheinbaum confirms the sportswear giant has opened talks with the Oaxaca state government.
Estamos viendo la parte jurídica para poder apoyar a los pueblos.
We are reviewing the legal aspects to support the communities. Often large companies take products, ideas, designs from indigenous communities in our country. In fact, we are working on a law to ensure, besides what already exists. In some ways, they are usurping the creativity of an indigenous community.
Un diseñador yo creo que debe de tener sus...
A designer, I think, should have their own designs to work with and not plagiarize something that has been our livelihood and source of income and work for most of the community.
The case is part of a wider trend, countries pushing back against what they see as the unauthorized commercialization of indigenous culture, raising legal and reputational risks for the global fashion industry. Elsewhere in the world, over 2,500 Buddhist monks marched for peace on Sunday, calling for full respect of the ceasefire agreement between Cambodia and Thailand. The monks, joined by nuns and residents, walked 3 kilometers from Wat Nom to central Phnom Penh. The march stopped briefly at the U.S. Embassy to thank President Donald Trump for initiating the ceasefire. The July 24 to 28th clashes were the worst between the two countries in more than a decade. A fragile ceasefire remains in place as third-party organizations inspect the disputed borders. Both countries are part of ASEAN, where stability is seen as key to sustaining regional cooperation. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.